Hello and welcome to the Weekly Outlook at XM.com. I'm Maria Pachardis, and joining me is investment analyst Marios Hadjikyriacos. We'll be taking a look at the week ahead. So Marios, let's begin with stock markets. Since early March, they were staging a comeback thanks to a lot of stimulus and liquidity by governments and central banks. But in recent days, investors have become a bit skeptical. Are fears that the U.S. is reopening its economy too soon driving this change in markets?
Hello, Maria. Yes, I'd say that's a big part of it. So if you exclude New York from the nationwide US numbers, the outbreak elsewhere in the country doesn't really seem to have reached its peak. So the concern is that the US may be opening up too soon, and that could ignite a second wave of infection, and that could therefore force the country into a future shutdown, hurting the economic recovery. Now, to make matters worse, we've seen US-China tensions come back with a vengeance lately. So the Trump administration is blaming China for the pandemic almost every day, and it's becoming very clear that Trump's entire election strategy is to launch a political assault on China. So, in my view, we're very likely to see tensions escalate further as we approach November's election, and that might happen via more tariffs or some other options being floated, like blocking U.S. pension funds from investing in China. But the bottom line is that geopolitical tensions have returned, and we are seeing a whole deglobalization theme take place right now. The icing on the cake is that the Fed is quietly suggesting that more stimulus should come from Congress, not from monetary policy. So we were listening to Fed Chairman Powell this week. Of course, he said, the Fed is here, prepared to do whatever else is necessary. But if you read between the lines, there was a suggestion that it's Congress that should now do more. The Fed has already done almost as much as it can. But if you listen to what Republicans in Congress are saying, especially in the Senate, there doesn't seem to be much appetite for any more stimulus. That could be because it's an election year, but the bottom line is, even if more stimulus arrives, it might take a lot of partisan bickering before we get there. So it might be delayed, or it might never come at all. Now, to sum everything up, we have the world's biggest economy possibly making a policy mistake by opening up too quickly. We have tensions between the two biggest economies, mounting, and the Fed is implicitly saying Congress should take the lead, but Congress doesn't really want to. So, in my view, that's a toxic recipe for riskier assets like stocks going forward, but a recipe for success for safe havens like the yen or gold. Now, the dollar is a little trickier. It has been a safe haven in this entire crisis, but that might be called into question if the US is forced into another shutdown. I'm not saying we're likely to see any major downtrend, but it could lose a little bit of its shine if we see a second wave of infection in the US.
Right. Now, on Wednesday, the Fed will release the minutes of its latest meeting, and on Thursday, we'll get weekly jobless claims and the preliminary market PMIs for May. What should we expect?
Well, not much. They'll give us a sense of the economic situation, but admittedly, the markets don't really react to economic data nowadays. Instead, what I think will attract more attention are comments from the Fed's top brass. So on Tuesday, we'll hear Chairman Powell will testify before Congress, and then on Thursday, we'll hear from the chairman, the vice chairman, and their top two lieutenants, let's say. So the most influential Fed members will all speak on Thursday. Now, it will be interesting to see whether or not they repeat this whole, we've done our job, now it's time for Congress to do its own job. And of course, any comments on negative rates will also be closely followed by the markets.
Okay, turning to the UK now, a lot of economic data is coming up. What is likely to attract the most attention, and how is the pound likely to react?
So the most attention will probably go to the PMIs that are due on Thursday, but As far as the pound is concerned, we've seen it lose ground lately. I think that's a combination of weak risk appetite. The pound has been very correlated to risk sentiment throughout this crisis, and concerns about the UK government's handling both of the health crisis and the opening up process. And most crucially of all, we've seen some comments lately from government officials suggesting that, yes, we are spending money today, but deficit is exploding and we might have to tighten our belt down the road. That's a very negative signal for the market, and the longer they say that, the more the pound will suffer, in my opinion. Now, overall, it's difficult to have any real confidence in the pound. Especially because of the Brexit negotiations. We are seeing very little progress there, and some very crucial deadlines are coming up. And I suspect that we're likely to see much more drama going forward, and the risk of a no-deal Brexit coming back to the forefront.
Marius, thanks so much. And thanks for joining us at XM.com.